look at the top headlines this afternoon. We see JP Morgan, they've gone short on Bitcoin. According to reports, the open interest in Bitcoin futures suggests that the crypto market is still in overbought state. Either the Bitcoin might struggle to keep up after the halving, just like we just discussed right there. We see Grayscale Bitcoin holdings is down about 50%. That's news because the price that they bought before now definitely was most of the one of the higher ranges we've seen so far with Bitcoin. Bitcoin's price after touching about 73,000. So the Grayscale Bitcoin holding, that's down. And now the question is, meme mania, is that over? At this time, we've seen all the meme coins, the frogs, the dogs, the cats, all of that minting gains in the market. But now there's a suggestion that the meme mania might actually be over, at this time. So who knows? Maybe the meme coins have gone to sleep right now with the downturn in the market. Let's bring in Olumide Adesina, our financial market analyst. Hello, Olumide. Hello, Olumide.
Yeah, hello, Ladi. Good afternoon.
Yeah, good afternoon, Olumide. Great to have you. So I saw that headline earlier today saying that Binance have shifted $1 billion emergency fund. They've shifted all of that to the USDC. I think they call that fund the SAFU fund. It was supposed to be safe, but it turned out to be a typo. Turned out to be the new word. That's SAFU saying that your money is safe, or SAFU. But talk to me about this switch now. Normally they had like Bitcoin and other cryptocurrencies, in this fund, but now they're shifting all of that into USDC. Any risk to that?
Ladi, USD is a stable currency, and you understand the dynamics it plays in the market. I think this year's data has also retreated the fact that investors really depend more on other assets like gold and the US dollar rather than Bitcoin and other risky assets. Despite the fact that we've seen Bitcoin posting year-to-date gains of more than 60%, we've seen moderation considerably by heightened geopolitical tension and currency declines in places like South Korea and Japan. That has also put the US dollar index at a 5-month high, despite moderating since yesterday and today. But as we speak, appetite for Bitcoin has improved from its low of $59,400 to now trading at around $62,000. That really has kept the bulls ranging. But it seems JP Morgan's outlook on Bitcoin seems to be on spot despite halving, and that's because appetite for risk has watered down with heightened tensions in the Middle East.
Yeah, and talking about heightened tensions in the Middle East, over the weekend we see Bitcoin, that market was open, so it reacted. When we got that news that Iran attacked some parts of Israel there with those missiles. But looking at the move now, we've seen oil. Oil actually rose Friday. That was before that, but that has dropped, since then. So there's no risk premium for oil at this point. But why is Bitcoin still reacting negatively at this time?
Yeah, despite the fact that panic has receded, caution is still in play. And that's why you see this dollar index breaking over this 5-month high. At some point, it was around 106 index point before moderating back to 105. So it still tells you that the appetite for dollar is strong, and you could also see it in UX stocks, despite the fact that Goldman Sachs brought in decent earning results. So back to Bitcoin, this is an asset that trades 24/7 without sleeping. Record inflow from BlackRock spot ETFs has also moderated. We're not seeing those inflows we saw in the month of March, like what we are seeing in April. So that definitely has an impact on the liquidity space. But, the crypto market is still $2 trillion up. Bitcoin is still above the critical support, 60,000. So there's still a lot to play about. I think it's too early for us to really put that on the long-term view of Bitcoin.
Right. And looking at 2023, it was the beginning of 2023 with the headwinds. We saw macroeconomic headwinds. It was risk-off sentiments. That was what was being thrown about at that time. But we saw risk assets They did well, in 2023, like Bitcoin and the likes. But this is 2024, first quarter is over. Is it time to start shifting away from risk assets, at this time, or could risk assets still do well in 2024?
I think what last year I taught a lot of people is that it's very difficult to bring in a spot-on analysis on this asset. I think looking at it this year, like I said earlier, Bitcoin has pretty much done better than most assets. It's up 60%. Definitely has rewarded long-term investors. But I think with the tensions around different places in the world and also climate change, in Dubai, there's a big crypto event going on, but the flooding has really affected that. That might also have some negative impact because that's an opportunity for investors in that space to interact. But my outlook is caution. I still see Bitcoin still staying much stronger, if not holding most of its gains. But we can never tell if Israel hits back at Iran or something else happens. So
Right.
I think caution is the key word here. Caution.
Caution. Thank you so much, Olumide Adesina, financial market analyst.
Thank you for having me.